flat for the markets, but I must tell you that's not a bad outcome today, because considering that it's the weekend, a lot of people who are trading for the week might be tempted to book profits, because profits they would be sitting on if they were long. So therefore, a flat market is not a bad sign. Yes, we are not quite ending above 23,000, but that's okay. We've nudged it. We've come back. We are at record highs. It's a day and a week of record highs, and we should celebrate that for sure. Mid caps and small caps, they were outperforming the markets at the start of the trading day. Currently about flattish for the mid cap index for sure. The small cap index, a tinge of red really, but nothing too dramatic and nothing too much to worry about. I wonder if banks and metals, the other two indices that we should look at before we get to specific stocks. Metals too flattish today, so not quite the kind of slam dunk that was seen day before yesterday or yesterday. In banking, about 1/3%. PSU banks aren't quite packing the punch that we would have thought they would. But let's get the heat map up on the screen and show you what's moving and what's not. Still, the quantum of red much higher than the quantum of green. I'll start off with the red first. Adani Ports, 1.8% lower. Now remember, there's a large block deal that has happened today. It's apparently, in trading terms, a bit of a clean out trade. The last of the sellers, if you will, or the last of the known sellers, which had a large stake, selling it out. We'll know about the official data when it comes, so I don't want to speak more about it. But yeah, just let's see if this is just a day's hiccup or more. Standard disclosures, of course, the Adani Group owns NDTV, and you're watching NDTV Profit. ITC, Tata Consumer, TCS are amongst the other stocks that are correcting. No apparent reason, just a bit of a pullback that's happening in some of these names. But banks, by and large, are looking slightly wobbly as well today. SBI, which was considered to be one of the principal beneficiaries, is actually down in the red. What's done well is HDFC Bank, and typical smacking of FI buying, because this is what happens. Where the largest overweights are, or where the largest presence is, you will see money gravitate there. So HDFC Bank about 1.7% higher. Telecom has had a pretty good day today. L&T marginally higher as well, and BPCL bringing up the list of the top 4 gainers, which are up over 1%. But Tamanna, can't say the same for the small caps, but you'd probably say it's a flattish day as opposed to a day which is sulking.
I think the will it, won't it question emerges. Are you going to manage to see a last hour boost to close above 23,000 or not? That will be exciting to watch. The broader up move, I would say, continues, because if I just pull up the sectoral indices and you see what's moving, you'll see that theme being consistent in terms of the PSE index really on top of that, nearly 1.5% up. And that's the big gainer. FMCG may be pulled down by an ITC and others, is sulking a bit, but finance, because of HDFC Bank. Just one point on HDFC Bank, where the greed and fear note as well also talked about how HDFC Bank now is well valued as a private bank play. But let's talk about the exciting moves, the large double-digit percentage-wise moves that we're seeing today, and Finolex Cables would be on top of that list. Numbers are being rewarded, decent numbers are being rewarded by the street. So Finolex Cables is one of them, 13% up. Johnson's Controls is the other one that I would pull up, and it's a turnaround story. It's 20% on a circuit, something that we talked about in the opening trade show today as well. You've gone from a loss to a profit, and Johnson Control looking good. BKG Foods is the other one. We spoke with the management today as well, and while the numbers are looking good because of lower inventory levels and lower raw material costs, but one interesting thing they told us is about how they are now focusing on the healthy snack market. And I don't know how much that will work, but that's an interesting direction. 4% up because of the rise in profits. Interglobe Aviation is the other, one to watch. 3% down. They're going to move into a business class, product as well. More details in August, but the street seems in two minds about whether that's a good idea or not. Vodafone is definitely a standout story today. 6.5% up. I don't know if you can pull up Indus Towers as well, but Indus Towers is also doing good. UBS has a note out on it. We will talk more about that ahead on the show. They have a target price of 18 rupees, but a lot of it hinges on the belief that the AGR dues that Vodafone will have to pay in 2026 will be, in a sense, a softer blow, because they owe it to the government, who also owns a significant stake. So that's the Vodafone story over there for you. Landmark is the other one that I wanted to point out. They're Results were okay, but the con call which talked about new vehicle sales being low has not been taken so well by the street. So about 6% down on landmark cars. The defense play continues unrelentingly. Bharat Dynamics and HAL as the two that I would mark out, continues gains, and we'll pull up the weekly chart ahead as well. Both of these stocks have done fantastically. So Niraj, if I were to look at it in terms of theme, and remember we're talking a day ahead of phase 6, 2 phases left in the election, and if election is still somewhere the dominating story, the momentum is fairly positive.
You have to admit that, and whether we are at 23,000 or 23,100 or 22,950, I think that's a matter of just rounding off error on that base. Amar Dev Singh, Head Advisory at Angel One Johnson, to talk about this and more. Amar, great having you. Thanks for taking the time out. Good afternoon to you. I wonder if you are continuing your bullish stance going into the weekend, or are you tempering it and waiting and taking new trades at the start of the week?
Yeah, so thank you for having me on the show. So we've been overall, I would say, cautiously bullish on the markets because if you look at the overall trend, the long-term trend, that continues to remain positive. If you look at the short-term trend, there we are witnessing some sort of consolidation happening there. But again, if you looked at the major, I would say, components in terms of advanced decline, in terms of the overall stocks trading above the 200-day moving averages. So that is, and apart from that, across sectors and across the mid cap, small cap, and the large cap, because large cap also, some of the large cap heavyweights have been doing exceedingly well in terms of Axis Bank, in terms of ICICI Bank, in terms of Reliance, in terms of HDFC Bank also pulling from the lows, in terms of Kotak Bank also pulling from the lows. IT more or less mixed. So some of the heavyweights have also contributed, and then we've seen some really good up move in Mahindra and Mahindra, Bharti Airtel. They've also contributed. So what we're seeing is across the board, across sectors. And if you ask me, Nifty has taken out a very important zone of resistance earlier, 22,700, 800. That has been taken out, and closing above that level, I wouldn't give too much of significance to the 23,000 psychological level, though. But sustaining over the 22,700, 800 is very important, very crucial for the next leg of rally. And if you ask me, the structure of the markets in terms of the short-term trend, that definitely has changed. That is positive. Also, if you look at the OI data in terms of the build-up that's happening, that also has been positive. So overall, the trend is positive, but at the same time, you also have to look at that India VIX has increased, so there's going to be volatility. And one good aspect is that now FII's interest, earlier selling, which was that seems to have abated. So that's one positive sign. Also, despite the US markets correcting significantly, we didn't see much of a correction here. So that speaks volumes, but we'll have to be definitely cautious at the levels. But the trend is up. There's no doubt about it. We have not seen a trend change, and trend change is only going to happen if we see Nifty trading below if you ask me from a short-term perspective, 22,300, 400, if that is breached, then we could say that there's a trend change. Otherwise, the trend is up. And 22,700, 800 should act as a strong support from a short-term perspective.
Good afternoon. I'm just wondering what your picks are this afternoon, where the focus is on a lot of old economy, some in the private banks working well, but in the mid and small cap space, anything interesting that you're spotting?
Yeah, I would say that one stock which I've spoken a lot about is Voltas. So this is one stock, if you ask me, the stock did correct significantly from the recent highs, and then again it was consolidating. Now we're seeing the stock pull back from its lows and inching higher. So this is one stock one can look at. I would say it definitely gains from the current, I would say, summer season as well. So that also is helping the stock. And the stock is very strong on the long term, on the intermediate term trend. Short term, we did see consolidation, but again, that was a buying opportunity, sustaining of the current levels. The stock has the potential to rally towards its all-time highs. So this is one stock one can definitely look at. And the other stock to look at is Finolex Industries. This is a second stock one can look at. The stock is reaching its all-time highs, and the stock is very strong on the long-term charts, intermediate-term trend, and also from a short-term perspective. And the best part is what we're seeing in Finolex is that the stock witnessed significant volumes on the 14th and 15th of May. So 14th and 15th of May, there was exceptionally high volumes. The stock did consolidate post that around the 300 mark, but it's taken that out. So this is a second stock one can look at, Finolex cables. And if you ask the levels to watch out for on the upside, 354, 355, that's a target one can keep, and the stop loss is below the 300 level. So this is a second stock one can keep a close eye on.
Finolex Industries is one stock. Finolex Cables also doing very well today, and so is Vodafone. We'll just get Amar's view on Vodafone in a second, but you know the trigger there is a UBS report actually on the telecom sector, and on Voda Idea specifically, they've upgraded it to a buy. They've set a target price at 18 rupees, and the focus is on relief on government dues. So the market is pricing in a 15 to 20% increase in 12 to 24 months as per this report. They're expecting relief through AGR reduction by Supreme Court or equity conversion by government likely. They say there's a possibility of 50 to 75% of AGR dues may be cancelled. Now remember, that's the big sort of, I would say, leap of faith, because those AGR dues are coming. The effort to go to the Supreme Court to say that, rethink about it has failed. So basically, it's the entity that they owe the money to that has to come back and say, okay, I'll let it go. So those AGR dues are about 4,500 crores, which kick in annually from FY26, and target price is in 50% possibility of AGR dues waiver. Niraj, I just wanted to get your take on that, because it is an assumption, and at the end of the day, any government, any policy decision, any political decision like this, it'll be at the end of the day a political decision. Yeah. It's a bit risky, I think, to assume it'll go exactly this way.
Yeah, you could argue, and it's a fair argument as well. I mean, why should it, when it may or may not have happened in other fashion for other players? Part one, in some sense that. And two, also, I mean, the timing of it could be very, very interesting, considering that everybody's talking about tariff hikes happening at some point of time post the election season is over, if they happen.
Yeah, but tariff hikes would be a drop in the ocean if you have to actually fork out all of this money. It's not really going to help them.
Yeah.
So it depends. I mean, the assumption is based on the fact that the government has worked hard not to make this a duopoly and keep a third player alive. Will it be at the cost of this huge sort of IOU? This
exactly.
Payment?
Yes.
I don't know. Amar, what do you make of Vodafone on the charts?
Yeah, I would say that, Vodafone, definitely these are stocks wherein those who are looking at investing into these, they understand the risks involved. So from that perspective, then only it makes sense. So someone is a, I would say, risk taker at a higher level, they would be looking at these stocks or touching at these stocks, because if you ask me fundamentally, if you look at the company's results and all that, so that really doesn't inspire much confidence. But yes, overall, the stock on the technically, if you ask me on the charts, the stock seems to have found a very strong base around the 12 level. From there, the stock has bounced back. And also what we've seen over the last, I would say, 20-25 trading sessions is that the volumes have been more than average. So that speaks that there is definitely interest in the stock. And the stock initially taking out the 14, 15, so 14 level, 14.5, 15 level, and trading over that level. So that definitely is a positive aspect. Technically, if you go back in time, in February, it had made a high of around 18.4, and then again in January, it had made the same high of 18. So the targets which were talked about, that is quite likely, because for that, the stock needs to sustain over the 14, 15 mark. That's very crucial. If it sustains over that level, then the stock could rally towards the 18 mark, where it is going to meet with very strong resistance. Technically, if you ask me, the long-term trend is positive for the stock. Intermediate-term trend, we are seeing some sort of consolidation. Short-term trend, again, is positive for the stock. So overall, yes, we could see some upside, provided it sustains over the 14.5, 15 levels.
Keep in mind, it gets out of the FNO ban. It sees some serious buying. The stock has gone up. GQG apparently bought yesterday as well, if the numbers are to be believed. And a clutch of things happening. Telecom, this AGR dues, some of it getting cancelled is one, but tariff hikes, if they happen, Vodafone, if it sells the Indus Tower stake, then all of that might just lead to some very interesting times for an investor in Vodafone Idea. 7% higher for the stock currently. The other one is Hindalco, which after having a day scare has done better. But today, Hindalco, of course, has news. It's reported its Q4 numbers. Profit and revenues beat street estimates. Margins, I thought, did okay too. The stock has come off a little bit from the highs of the day. Kanika Johnson to tell us what really happened in the quarter for Hindalco. Kanika, good afternoon. What are the key takeaways?
Right. So Hindalco its quarter four results have beat estimates. While it was only estimated that the revenue might fall by 3%, it has risen by almost 0.2%. And coming to its net profit, it was expected to rise by almost 3%, but it has risen by almost 31%. Now, this is mainly attributed to improved margins across all business segments. Few key highlights. Firstly, it reported an all-time high quarterly copper EBITDA, which was up 30% year-on-year. This was mainly backed by stable operations, higher domestic sales, and better treatment and refining charges of copper. Secondly, coming to its Novelis business, Novelis reported a strong Q4 performance with EBITDA per ton at $540, which was up 25% year-on-year, and this was led by higher volumes and improved pricing. And under Novelis, the total shipments of flat roll products were up 2% year-on-year, which was supported by stronger demand for beverage packaging and record automotive shipments. Now, Novelis revenue in quarter four was down 7% year-on-year, which was impacted by lower average aluminum prices, but it was partially offset by the higher total shipments. Additionally, Novelis Bay Minette project is on track and is expected to be completed by second half of calendar year 2026. And the company's focus is on value-added products expansion with its India's first upcoming copper inner grooved tubes facility, which will be commissioned by the end of calendar year 2024. And all its organic growth projects are on track, mainly the $4.9 billion investment in Novelis and $2 billion projects in Hindalco, India.
Okay. Kanika, thanks for putting that into perspective. That's so no negative surprises is great. Now we just need to wait and watch if indeed the commodity pullback that happened, will it again stabilize, and if China measures come to the fore, can commodity prices inch up and thereby aid the sentiment around Hindalco and some of the others. Hindustan Zinc has had a crazy up move in the recent past. Let's just wait and watch if that slight pullback that we're seeing, does it see some support at the current levels? Anyways, time for a quick break. On the other side, we talk about some of the Adani Group stocks and what they have done. We'll get in our fundamental guest on the show, Dipan Mehta, as well. Stay tuned, we'll be right back. Back with India Market Close right here on NDTV Profit. The stock that is really ripping up the charts is HDFC Bank, up about 1.7%. Now, 2 days on a trot, HDFC Bank has been the top point contributor on the index, smacking, as I said, of FI buying. So watch out for this one. Yet again, HDFC Bank it is that is leading the charts higher. Vijay Chopra, MD and CEO of Enoch Ventures, also with us on the show. And Vijay, a quick word first on HDFC Bank before we move to the Adani Group stocks.
Yeah, so, I've been advocating of buying large cap stocks for quite some time now. And I think we had a very clear discussion that, from small caps and mid caps, why not go towards the most stable companies which haven't moved much. So HDFC was also one of the names, apart from ITC and Hindustan Lever, of the world, which we've been talking about. So definitely it's a behemoth. It is one of the largest private sector bank. So I don't think there is any valuation mismatch at this level. The stock has been consolidating for a long time and it has been down. So definitely, when there is sector rotation, whenever there is profit booking at the higher levels, so people look for safety. I think that, HDFC at this time can be paired with the likes of ITC and HUL. So I don't think that there is any problem buying fresh as well. And people who are holding, definitely I see an upside. Probably this technical gap around 1620 and 1660 would be filled. So I see an up move of about 100, 150 rupees from here. And for sure, I think when people are booking profits at the lifetime high, so people are looking for safer havens, and HDFC Bank is one of them.
Well, splendid showing there. Splendid showing for some of the others in the session today. Not so much for the Adani Group stocks today, but remember, it's been now, Adani Enterprises at least has done very well. Flattish right now, but in the green largely. And Adani Ports, as I said, has had a temporary pullback today. The reason I say it's temporary is because it seems to be a trade wherein the large investor which was due to sell, that entire stake is out of the way. So that's for Adani Ports. With regards to Adani Enterprises, Cantor Fitzgerald came out with a view or came out with a report which kind of rubbished the story that came into the Financial Times and talking about noise, saying that it was a noise from a long time ago, and their targets of course stayed as is were. Didn't seem to be too perturbed by all the noise, as they called it, around it. Now, standard disclaimer, of course, the Adani Group, as I said, owns NDTV, and you're watching NDTV Profit. But Vijay, come in here, solid rally yesterday, a bit of a breather today. Any thoughts on any of the Adani Group entities that you may be tracking?
Well, I think that definitely you can't, if you're in the markets, you can't afford to stay away or, not track Adani Group companies. For sure, the Adani Enterprises has come up quite a bit since the Hindenburg fall. But yes, it has paid all the losses. So I think that, it's back on track. But again, one of the most beautiful businesses which I like in the Adani Group is one, Adani Ports, and secondly, the Adani Wilmar. Adani Ports has also done well, with a bottom of close to about 390 odd when it fell down. I was constantly recommending this stock because it has a wonderful asset. The business model is fantastic. Secondly, with growing business, you need ports for logistics. And Adani has, this group has ports on the east and the west side, both of the country. So they have very good strategic locations wherein they can, get a lot of business. Definitely Mundra is one of the major ones. So Adani Ports, for that matter, I think that one should definitely latch on to it whenever there is a correction. Anywhere between 1150, 1200, if at all you get in a correction, it would be a great buy. And I think that, this stock, I've been always saying that as a potential multi-bagger because it is one of the most beautiful businesses in the Adani Group. As far as Adani Wilmar is concerned, I think that it hasn't moved much, since the fall. It has been consolidating nicely about, 350 odd levels. So I think that Adani Wilmar is also a consumption story, a homegrown story. And, the likes of Fortune Oil and, Atta and whatnot, they have a lot of products in FMCG. So they are fast selling goods, and they are preferred over a lot of local brands and a lot of brands in the country. So I think that Adani Wilmar sooner or later should be ready to shoot up, and it has been consolidating nicely around 350. So long-term players, surely they can buy into Adani Wilmar. So these are two companies which I like at present. Adani Enterprises has moved up quite a bit, so I would recommend that wait for a correction to end.
Okay. Amar, do you see a pullback on the charts on any of these?
Yeah, I would say that Adani, Wilmar, definitely I agree with the earlier speaker that this stock seems to have formed a very strong base, and but the stock is unable to actually breach the 350, 360 zone, because that's a zone of resistance for the stock currently. It's around 345. Sustaining over 350, 360, then we could say that the trend has changed from an intermediate term perspective. The long-term trend is more or less towards consolidation, but then the stock could witness an upside if it sustains above the 350, 360 levels, and the stock could rally towards the 385, 400 levels.
Okay. Well, do watch out for some of these names as well. Vijay Chopra, before we thank you though, I understand we will leave you at 3. At 23,000 odd, you've mentioned this penchant for wanting to bet or buy into large cap names. You spoke about making a portfolio of HDFC, ITC, etc. But surely there are mid-sized businesses which have good results. A clutch of them have been seen visible this earning season. Anything that has caught your eye and then you would want to buy in?
Well, I think that there are still pockets of excellence, as I said. I think that stocks like BSC seemingly look very good. I think that the power sector is giving a lot of opportunities. So the likes of, Power Grid, I like. Even NTPC is one stock which I like. You should buy in a correction. I'm again saying that, keep on buying in a correction. Just don't latch on to or jump and start buying, because the markets would be heavily volatile. We have our election result around the corner. So if at all long-term players want to buy, let's wait for 4th June and let the market and let the dust settle down, and there would be opportunities to buy. So I would, my picks would be from the defense sector in a correction, from power sector, which I think should do very well, and specialty chemicals, which has been consolidating at lower levels, FMCG and select banking, the likes of Bank of Baroda, I like a lot in the public sector, PSB space, HDFC Bank for sure, ITC, as I mentioned, Hindustan Lever, the management of Hindustan Lever very clearly said that they are seeing some green shoots of revival in the rural space, which is a very good news for, the FMCG space. Secondly, we have a monsoon which is above normal, about 106%. I think all the FMCG companies do very well post a good monsoon. So the demand starts picking up. And of course, the management is also seeing, these changes. So I would say that, if at all you have cash, just don't jump and buy, wait on the sidelines for a week or so, and we'll get good opportunities to enter.
Vijay, you mentioned defense. Before we let you go, your top 2 or 3 picks in this space, considering pretty much everything has run up?
Well, I said, I'm again saying, Tamanna, that we should buy in a correction. So all the defense companies look very good, BDL, BEL, Cochin Shipyard, Masdoc, all these companies, even HAL for that matter, because it's getting a lot of orders for the light combat aircrafts. So I can confidently say that, if at all India has to touch that 5 trillion mark as an economy, it cannot do without defense play. And these defense companies are going to be, very long-term bets. But again, buy in a correction. Just don't jump and buy right now, because I think that most of the counters are overheated as of now.
All right. Thank you so much, Vijay, for speaking with us today. We're taking a very quick break. But on the other side, we talk more picks, and of course, we get you more details of the key fights from the Delhi NCR region. Remember, phase 6 tomorrow. And it's interesting because all seats in Delhi NCR go to the polls. What are the big fights? We get you all those details after the break. Welcome back. Flat markets may be taking a pause before the weekend and, of course, phase 6. But markets which are staying steady after the highs of 23,000 plus this morning, there was a concern that there would be profit booking. We haven't quite seen that. You haven't seen a huge pullback either, but it's steady as she goes in a sense. Deepan Mehta now joins the conversation from Elixir Equities. Deepan, good afternoon. Great to have you on NDTV Profit. As always, let me first get your take on an HDFC Bank. HDFC Bank, because stellar move today in an otherwise, I would say, a little cautious bit of a market. Do you think private banks are now coming into their own, or is the focus still on your public sector companies, defense, etc.?
Yeah, Tamanna, good afternoon, and thank you for having me on your show. See, I think this is maybe a move towards some amount of safety because clearly I think it's a value play. HDFC Bank has been a great performer in the past. And I suspect that FI buying may have been emerging in this stock, or at least there's a cessation of FI selling because a lot of FIs have been selling continuously for the last several months or so, and this has been amongst the top holdings where they are liquidating. So it's more to do with the technical factors on the counter rather than fundamental. I think fundamentals are pretty well known, and generally we have a good handle on which direction the company is going in. Last couple of quarters, I would say more than that, have been a bit disappointing, but the stock certainly holds promise. So from a long-term investment perspective, it's better to remain invested. But today's move seems to be more about some specific concentrated delivery-based buying.
So HDFC Bank is that kind of a move. What about some of the defense counters that we talked about, Bharat Dynamic and HAL? That entire pack really having another great day, Deepan. Are the moves now beginning to worry you a bit, or you think that there's much more left?
Oh, Tamanna, I think all the moves that are taking place in the market are worrying. And, at tops like this, I know bull markets cross the walls of worry. They climb the walls of worry. But I think valuations are a bit stretched. No doubt for defense companies, the results are very good. They are reporting finally 30-40% type of growth rates, and the massive order book position which they are sitting on, it's now finally coming into execution mode. But look, valuations for defense companies are trading at 30-40 times or so, little lower for shipbuilders, of course. But a lot of the positives have got captured in. And end of the day, even if you have a burgeoning order book position which runs many years into the future, you still have to execute and deliver. And those capacity constraints, production constraints, execution challenges will always remain. So I don't expect these companies to continuously report these kind of growth rates going forward. It will be more sedate. But that, I think, has got priced in. And it's a great sector to be in. And in fact, it's one of the target sectors in a correction. If these stocks are available 15, 20, 25% cheaper, then they would make more sense and provide some amount of margin of safety as well.
Is, are you going to get that opportunity, Deepan? And we've been speaking over the last several months, and I hear this from you often, the concerns over the valuations. I'm just wondering how you are looking at it, because difficult to really time when you will get that opportunity, isn't it?
You're absolutely right. I think a lot of people waiting in the sidelines like us are just waiting and waiting for a correction. It's not coming through. But it's okay, I mean, it's not that we are completely into cash. Some amount of cash is there in the portfolios, which is strategic in nature, 10, 15, 20% or so in different portfolios. And that can easily be deployed when there's a correction, even if it is a shallow one. But look, we have a major event happening. And, let's see how the election results. First, we deal with the opinion polls and then the election results. there could always be a sell-on news syndrome. So much of the positives of the election result has got priced in that even a minor miss, that in itself could be this bit of a disappointment. And there are no buying triggers per se, because market is expecting BJP NDA to have the same number of seats or slightly more also. And if there's a marginal miss over there, then you could have a sell-off. I think we're entering the election results on a very, very strong note, to an extent an overbought position. So I would say that even if everything goes right, you could have a correction post results as well.
Just to take this further, because everyone's expecting a very exciting 4th June, perhaps a 3rd June more so, because you'll have your exit polls, etc. out by then. You're saying that at the first opportunity, even if you have a clear majority of the current government, policy continuity, etc., do you see more of a chance of a sell-on news situation?
Yeah, absolutely. I think, it happens time and again, especially with companies we have seen when they announce their results, the results are exceptionally good. The stock price corrects because the positive news is in the price. So same thing can happen on an election result as well, that, that BJP, NDA are coming to power. What has been priced in is same or higher number of seats as well. Who knows? I mean, if the same result comes, there's, people may shrug it off and say, okay, this was expected. Now what, So that could be a, kind of a sell-on news syndrome. And mind you, if there are 10, 15 seats short than what the street is expecting, that certainly will, put a kind of, I would say, some amount of disappointment, little damage to sentiment. And, once the correction starts to set in, it doesn't take long to gather momentum. So one should be mindful of that. And even if nothing of this happens and the market keeps on going up, then I think it will enter into a parabolic zone where anyway you should not be participating on the buy side. So from whichever way I look at it, I don't find any scenario where I can look at justifying heavy purchases at these levels or at higher levels. Earnings growth is what it is. It's pretty predictable. It's largely got discounted. We know the sectors which are doing well, which are not doing well. And the companies which are doing well, the cyclical ones, they have reported great numbers. The valuations have moved up, so people are forecasting well into the future as well. So when I look at the complete picture, all I can see is that it's the entire market, large parts of it are priced to perfection. It's as if that there's going to be no negative news flow or negative outcomes ever. And that is not, likely in a real world, And mind you, we live in quite a dangerous world. There are geopolitical issues, there are environmental issues, and there are elections not just in India, but in UK and in US. And inflation has not completely died down. So it's not that, we are in complete blue sky scenario the way the street is looking at just now.
Yeah, and the fact is that geopolitical issues have moved sort of to the backbench as far as India is concerned. Now, let's get specific and get a specific focus on landmark cars. The stock fell today as much as 7% in trade as the company's profit and margins slumped. Slight recovery there, still down about 6%. But what is the concern really? Puneet joins in with key details.
So apart from the margins falling, it's a strategic problem that Landmark Cars is facing. We've divided the results into 5 key points according to us, which is a problem. Now, one of the first ones is a slow new car sales. Now, they have seen a margin decrease of roughly 90 basis points, but already it was just roughly a 3 to 4% EBITDA business. So it's come down to just 2.6% EBITDA margins in this particular quarter, and for the financial year as well, it's been around the same range. They said that they weren't able to partner with any of the top brands last year, and negotiations took time, and that's why, and the existing brands did not launch as many models. So that led to lower sales and revenue fall on an overall level for financial year 24. They also said that they've had a change in strategy and added new brands, and which were these? One was M&M, which is a key addition. Kia Motors was the second one, and MG Motors. These are the 3 brands for whom they will be launching outlets into this particular financial year. Apart from that, Renault, which was a key focus for the company, they are shutting already. They've already shut 6 6 outlets for the company in Punjab, and they've also spoken to the company to provide financial assistance until the volumes recover for the same. They've also had a conversation with Volkswagen where they have roughly 20 outlets, which is roughly 20 to 25% of the total outlets, where they have said that until sales recover, they will have to have negotiations and provide financial assistance as well. The third one is the after sales business. This was the high margin business, or roughly 18 to 22% every quarter. Now this has fallen by roughly 300 basis points for this quarter. Revenue is also just slightly up by 5% into this quarter. Now this is roughly a 800 crore business, and every margin dip is a key problem for the company. The fourth one is the high inventory. Now because the older models was where brands like Volkswagen did not launch any models, so they had a very high inventory build up, and now that is getting liquidated with discounts. The problem is the gross margin has fallen 300 basis points because of that, which is a key concern to the analyst. And finally, the strained financials. We said gross margin is down, average selling price is also down. They have said that they will be doing a big investment of 225 crores in this particular financial year to open these outlets of Kia, Mahindra as well as MG Motors. So overall, things don't look very promising. We will have to see how they are able to maintain the ROIC number that they have said of 20%. It seems a little difficult, but we'll see how the company recovers from here. Back to you.
All right, so Landmark having a tough day. Amar, do you track the stock? What do you make of Landmark?
Yeah, when you spoke about this, then I pulled up the chart. So what we are seeing here is that as per the fundamentals also, it really appears that the stock isn't really going anywhere and seems to have topped out from a medium-term perspective. And if we look at the stock has got good support coming around the 700 mark. So that's a level to keep a close watch on, because that was the low, that the 691 was precisely the low that it had made in the last week of March. And from there, and earlier also it had made a low of 685. So 680, 700, that's a very crucial zone of support. If the stock takes out that level, that means further selling could be witnessed in the stock. And there's no, I would say, long-term trend or the intermediate-term trend for the stock remains, I would say, in a consolidation phase. So there's no uptrend in the stock as of now.
No uptrend in Landmark for now. Deepan, just wondering if you have a view on autos overall. And I'm not sure if Landmark is something that you look at closely.
Tamanna, Landmark is a company in which we and our clients are invested, and we are feeling the pain just now. Because this is clearly a company which is disappointed big time. And the reason we liked the company in the first place was because we couldn't buy Mercedes India. So we thought the next best thing to buy would be one of the largest dealers of Mercedes India. And that also is not playing out well at all. Quarter after quarter, there are disappointments. Different reasons keep on coming through. They're investing in new automobile agencies. Now I hear about higher inventory levels, discounting. All these are, are not giving a good comfort level. And we may review our view on Landmark cars and may look at even selling it off because it's not living up to its true potential. I thought that there's such a long waiting list for Mercedes cars, and even the value of the Mercedes, the average selling price was moving up significantly, and that would benefit Landmark cars. But none of this is visible in the numbers of the company. So maybe it's better to just buy OEM. We thought of experimenting with a car dealership company, but so far, that experiment has proved to be a complete failure. So we need to go back to the drawing board. But yes, to come to the first part of your question, very, very positive on autos per se. But valuations, again, a bit of an issue. M&M in particular can be watched closely because it has got a very high beta when it comes to the monsoons. So the farm equipment division will tend to do much better, and it's been a bit of a laggard. And a lot of the SUVs are sold in the rural areas. So if there's a jump in rural incomes, I think M&M could be one of the biggest beneficiaries from the auto industry.
M&M is the big pick in autos. Deepan's not very happy with his experience with Landmark. So, that's something that the street is reflecting today as well. Let's shift gears just for a second. And we are on the eve of the last two phases of the general elections. All eyes will be on phase 6. And what's also interesting is that you have 8 constituencies from Delhi NCR which will go to polls tomorrow. Now, what are the key contests there? What are the big fights? My colleague Nupur joins us with all of those details. Nupur, Delhi is always exciting. and it has been a clean sweep for the BJP in the last couple of elections. But this time, the difference is that all opposition parties have come together.
Absolutely, Tamanna. So it's going to be really interesting to watch out for how that pans out, given the fact that the AAP and the Congress have decided not to field candidates against each other. They're supporting each other. So very interesting dynamics over there. But we'll just take you through all these constituencies. We begin with the Northeast Delhi constituency. Now, Manoj Tiwari, interestingly, the only leader from the BJP who they've put their money behind again. Now, he's the only one who's been retained. He's, of course, up against Kanhaiya Kumar from the Congress party. Do remember, this is his second foray, that is for Kanhaiya Kumar. Earlier, of course, he contested from Bihar in 2019 and lost. The next constituency that we're going to focus on is New Delhi. Meenakshi Lekhi, the sitting BJP MP, of course, has been gotten rid of. She was one of the first ones to be not renominated in the first list of the BJP. Instead, they fielded Basuri Swaraj. That is, of course, Sushma Swaraj's daughter, relatively inexperienced, up against, of course, Somnath Bharti of the AAP. Somnath Bharti, a lawyer, a loyalist of the Aam Aadmi Party. Next up is Northwest Delhi constituency. Of course, Hansraj Hans was the sitting MP, not being repeated this time. Udit Raj, very interesting pick from the Congress party. Do remember that he is someone who is seen to be a bit of a rabble-rouser in that sense, but he's been picked. He has, of course, he's going to be going up against Yogendra Chandolia. Yogendra Chandolia, of course, has been the former mayor of Delhi, and that's a trend that we are seeing with the BJP picking up those candidates who have been former mayors. Next constituency, Chandni Chowk. Chandni Chowk now is the smallest constituency in Delhi. Harshvardhan, the former health minister, was one of the first to say that he's going to be retiring out of politics. So he's cleared the way for Praveen Khandelwal of the BJP up against a very senior Congress leader, Jaiprakash Agarwal. East Delhi, another interesting constituency. Gautam Gambhir, of course, has decided to retire entirely from politics. So he's out of there. The Aam Aadmi Party, Kuldeep Kumar is who they have fielded. He is currently an MLA in Delhi. He's, of course, going to be fighting against Harsh Malhotra, who's another former mayor of East Delhi. So that's something that we are seeing the BJP picking up municipal leaders for this election. Next one, of course, West Delhi. West Delhi is Mahabal Misra of the Aam Aadmi Party. Now, he was with the Congress before. He's jumped seats this time, but obviously we are going to see the Congress support him. Kamaljeet Sherawat, another former mayor. She was the mayor of South Delhi. Next up, of course, is the South Delhi constituency, so a bit of a swap over there. The sitting MP, of course, is Ramesh Bidori, again been gotten rid of by the BJP. We instead have someone who is considered to be a senior leader from the BJP. Ramveer Singh made his beginnings with the ABVP, so that's how long back he goes. Another Sahi Ram Pehelwan from the Aam Aadmi Party. As the name suggests, of course, he's a wrestler and he's hoping to wrestle this seat essentially away from the BJP. And the other constituency that we're going to focus on is Gurugram. Very interesting. Raj Babbar. Now, he's been out of politics. Of course, he's hoping that this is going to be a resurrection of sorts for him. Rao Inderjeet Singh, he's the sitting MP from the BJP, so he obviously does have quite a bit of a sway. So, Tamanna, very, very interesting to watch out for how this really pans out.
You know, what really strikes me is that the BJP has been clinical in moving out a lot of maybe candidates that they didn't think would fit the bill. So let's see what the results really bring. Thank you for that, Nupur. All right, let's get our focus back on what's happening with the markets. You're looking like you're in perhaps for a flat close, just a few minutes away from close, and you're seeing that consistent story of an HDFC Bank leading the pack. Bharti Airtel, L&T are some of the counters that are doing fairly decently today in trade. Vodafone Idea is the other standout story. In fact, Deepan, I was keen to get your view on V. I mean, this UBS note has given another lease of life to Vodafone Idea, up 8% today. They're looking at an 18 rupee target price. Are you convinced with the whole story that AGR dues will be pardoned in a sense by the government in 2026?
That is event driven, and even after that, I don't know how Vodafone will come to profitability, because they are like the loss margin is about, I think, beyond 65-66% or so, which means that revenues have to grow up by the similar quantum, or expenses have to go down by 65-66%, and that doesn't seem to be likely. So I'm not getting it. I cannot create a scenario where Vodafone will start to break even after considering all non-cash charges as well. So from that point of view, considering the kind of fundamentals underlying and track record, I want to avoid Vodafone. I know it's a low price stock. It does tend to attract a lot of traders, and the IPO did very well. And of course, some amount of trading profits are there. But from a long-term fundamental basis, I don't see the stock really outperforming. I'd still go with a Bharti Airtel. End of the day, the entire story in telecom is about rising ARPUs. And if that is going to happen, then Bharti Airtel also will be a very big beneficiary. Last couple of quarters, there have been some headwinds or some aberrations when it came to their Africa business. But I think those will get ironed out in the current financial year. And a lot of value is created in the African subsidiaries as well. So when you look at the complete picture, I think more positive on Bharti Airtel than Vodafone. But yes, there could be trading rallies in Vodafone. But look, can you really buy Vodafone and make it part of your core holdings? You can't. But Bharti Airtel, you can. You can buy as a large proportion of your portfolio, be part of your core holdings as well. And that clearly, I think, is the attraction.
What about metals, Deepan? Are they now part of your core portfolio in any sense? You're seeing a change in the commodity cycle. Hindalco numbers were also out today and seem to be as per estimates largely. We'll just pull up Hindalco and see what's happening over there. Are you constructive on metals right now?
I think that non-ferrous metals are looking very interesting. Zinc, aluminium, copper all have rallied by average, I think, 25% or thereabout, if I'm not mistaken. And that's yet to get reflected in the numbers. Hindalco in particular, I think, looks interesting. It's a quality player, and Novelis IPO will release a lot of capital for investing. The core aluminium business should do exceptionally well. And also positive on Vedanta, because if they split the company, which is their plan, and one or two businesses are sold off, and that way the debt at the promoter company level is reduced, then certainly it will improve the sentiment. In any case, zinc also is doing extremely well. So you could have robust profitability in the current fiscal. So yes, positive on non-ferrous metals. Ferrous metals disappoint with the numbers which came through across the board. But look, that also has potential, but I'm not sure that the risk return is favoring these steel companies.
Amar, I wanted to get your take on Hindalco, another stock that has run up quite dramatically, and the numbers were out a short while ago. The street doesn't seem to have liked the numbers too much. Their total income is up about 18%, net profit up about 9.5%, and there's a dividend as well, but we'll have to look at the line items and figure out what the street doesn't like. In terms of the charts, do you have a call on Hindalco?
I would say, if you look at Hindalco, what we are seeing is that the stock seems to be witnessing some profit booking. Overall, the long-term trend still remains intact because the stock earlier was unable to breach the 210, 230 zone. So that has been taken out, and the stock is currently around 256 odd levels. So I wouldn't recommend fresh entry at the levels, but those who are long, they can look at booking some profits if this week's high is not taken out, because this week's high should act as a very strong resistance zone for the stock.
Now, as we're wrapping up in the last couple of minutes, Amar, what would be your BTST calls? How would you look at a Monday? We're leaving this market close to and at life highs, but no clear direction.
Yeah, that's true. So one stock from the chemical space, because what we are witnessing is that the chemical stocks, most of them are really firing on all cylinders, and Rashtriya from the government space, the PSU, Rashtriya Chemicals looks quite promising because it has breached a crucial zone of resistance somewhere around 150, 154, 55. That was acting as a zone of resistance. The stock has managed to trade above that level, close above that level, and significantly heavy volumes. So sustaining of the current highs, the stock has an upside potential. So 160, 162, that's going to act as a zone of resistance. If that is taken out, then the stock is definitely headed higher towards 175, 180. So this is one stock one can look at.
All right. All right, RCF is one sort of BTST call that Amar has. Thank you so much, Amar, for speaking with us. Deepan, thank you once again for joining us. Always a pleasure to have you on the show. Now, just less than about 3 minutes left to wind down what has been a very, very interesting week. And I think the real story will be in the weekly charts. You're not quite closing at 23,000, some distance away, 22,950 right now on the Nifty. We'll see what that last closing tick is. But, you know, you're seeing a flat market over here, nothing moving too much. Sensex, though, sitting pretty above 75,350 as well. Let me pull up the line graph through the day because it's been an interesting day in all, and the advanced decline ratio will give you a sense of what kind of a market we've seen overall before we get into the specifics. I'm talking about the advanced decline ratio, and of course the Nifty over here dropped a bit from its highs. It touched that 23,000 in the beginning and then dropped off. It's showing you what kind of a range-bound trade that we've had through the day. You hit 23,000 in the first 5 odd minutes of opening, and then you've had a bit of a consolidation, not massively, I would say. Even if you look at the advanced decline ratio, it's not too much of a gap. Of course, declines larger than advances, and that gap opening a bit towards the end. It'll be interesting to see what the FII figures are for today, though of course that will come after market close. We'll pull up the heat map as we wind down to the last minute or so of trade, and HDFC Bank is the standout story of a day which hasn't seen too many moves. I would add Bharti Airtel to that as well. If private banks have been in focus, then HDFC Bank has led that pack, so has Axis, BPCL doing fairly okay, so is L&T. And, Maruti for a second day in a row is having a pretty good day, so not too many moves. On the losing side, you have Adani Ports, large block deals, family office sales there impacting the stock. Tata Consumer, Asian Paints. Not a great time for your consumption stocks. ITC has been sulking ever since its numbers came out. Even IT has not had a very good day as far as the markets are concerned. Broader markets also have been fairly flat, not too much of an action there. Yeah, you're seeing the Nifty Midcap 100 close completely flat. So now, what are the big triggers is the question. The big triggers continue to be, I suppose, voter turnout for phase 6 will be watched very closely. You're at the fag end really of election season, and the markets are also taking a bit of a breather, maybe a Friday move after the kind of huge upswing that they saw yesterday, and you're seeing that ticking in. I want to pull up the BSE 500 top stocks to just give you a sense of what has really worked, because we're looking at all of this and wondering what really happened in the market today. Well, quite a bit, and especially when you look at what has run up today. Aegis Logistics is a last minute kind of a move. Finolex on the back of good numbers. Bharat Dynamics is telling you the story, and we'll pull up the gainers in a second for the public sector companies as well. Vodafone Idea was one standout story of the day because of that UBS note coming in. Amara Rajas has done pretty well. Now on the selling side, Bayer Crop, Suzlon Energy numbers have not been what was expected. Paytm, after the numbers, there have been a number of notes actually with question mark of when this company can come back to profitability. They're also tightening the ship, and that perhaps has been hurting the stock. Hutco numbers came in just a short while ago, and the street is a bit disappointed. But I want to pull up sectoral indices for you and just give you a sense of what has really worked in the markets today. And in an otherwise flat market, it's all about the public sector enterprises. And we'll just pull up the internals of that index for a second to show you the strength there. PFC done well, HAL just completely unabated, Bharat Electric, REC, all of these stocks doing fairly well. So let's look at where the close finally is and pull up the weekly charts, because like I said, it's been an interesting week. It's been a week, I would say, of shrugging off concerns that you saw the week earlier. So over the week, you've gained about 2%. You're closing near the week's high. And very close to 23,000. Your final close at 22,950 is showing you that you're not a far way off from 23,000 at all. I want to pull up the mid cap and the small cap indices also just to give you a sense of how they are closing the week. And the mid cap 150 has not done as well as the Nifty, but not too badly either. The small cap has been a little tepid. Just Bank Nifty before we wrap up the summary for today. I want to see Bank Nifty over the week, and Bank Nifty has been an interesting story, nearly 2% up as well. So where are we leaving this Friday close at? We're leaving this Friday close at with an inherently strong market, taking a bit of a break after a huge run up, but standing steady. Even after touching at 23,000, we've not seen a huge bout of profit booking. So the focus now shifts in to, I would say, the last week before election results, and that's where all the action will be. So for now, that's all we have on India Market Close. Thank you so much for joining us, but stay tuned, a lot more coming up on the other side.